Well, good morning. Hey, today let's talk about things for the summer and things going on in the current economy. My topic is, why are peaches like interest rates? Well, I don't know about you, but in the summer, one of my favorite things are fresh peaches. And today, just finished my favorite annual pie, and that's fresh peach pie. So peaches are one of those things, if you like local peaches like I do, they're around a very brief period of time. Well, I think our economy right now and the moves that it's making, the interest rates are going to be a lot like our fresh peaches. You're going to wake up one day, look around and say, boy, I'd like the chance to have one more shot at that interest rate, just like I'd like to have one more shot at the local fresh peach. Interest rates right now, contrary to what you're seeing in the news, are actually moving in your favor. They're going down. Right now, you have the ability, based on your credit, of course, to lock in a maximum rate in the neighborhood of 4.5% with many lenders. We'd be able to do rate protection, which puts a ceiling on your interest of 4.5%, but you would float down if the rates are lower when you finally settle. And this is a 90-day window where you can lock in that rate. If you were settling today, you'd have a ceiling slightly less than 4.5% fixed for 30 years based on your credit. However, you'd be settling on that loan today in the neighborhood of 4.25%. So you lock in today, 30, 60, up to 90 days from now, you can have settlement. If the rates are lower, you simply float down one time and take advantage of a better interest rate, and that's fixed for 30 years for you for the time you're making your payment. Quick example, today if you bought a $150,000 home, we put a ceiling on that interest of 4.5%. You need a minimum down payment of a little more than $5,000. That's 3.5% to go with an FHA loan, probably one of the most used loans today. But you're left with an interest payment, interest and principal payment for 30 years of around $735. Now you add mortgage insurance into that if necessary. Of course, taxes, insurance, they'll be added into that. I don't know what you're paying for rent, what you're getting for that right now. But $150,000, you're buying a pretty nice house, and we'd rent it for more than $750. So there are many other advantages we'll talk about in other segments on this show. But for today, interest rate protection and summer peaches. A great comparison because they're here for a very short period of time. You can lock in. But the great thing with our rate protection, up to 90 days from now, you're guaranteed that rate or maybe even better. These peaches will be gone. They'll be gone in the next week or two. So that's my topic for today. Hope it's helpful to you. If you have any questions, I'm John Tice, RealtyChef, and I'd be glad to connect you with my friend Bill. We'll get you some interest rate comparisons. There'll be a no strings attached, no obligation, pre-qualification, no cost, and let Bill and I explain to you some of the options in today's marketplace to take advantage of the great buys and the awesome interest out there for you today. Thanks.